Kirk Duckwall here with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, have we seen the end of higher interest rates? Possibly. We'll take a look at that in just a second. But first, if you like these videos, make sure you click on that subscribe button, like, and share as well. All right, I'm going to change up the order and go right into interest rates and then get into some of the local real estate stats after that. All right, let's take a peek at what's going on. Looking first at one of the driving factors, which is the 10-year Treasury yield. So the Fed chair came out yesterday and announced they're going to put a pause on Fed interest rate hikes this month, and then they'll recheck next month and make a decision what they're going to do. Well, this pause is the first time they have not made an increase in 10 consecutive decisions. So this is a pretty big deal. And we are seeing that 10-year yield starting to drop off. So as we switch over to the 30-year fixed rate. Here I'm on Mortgage News Daily. I like this site a lot, especially what they're showing is the trend here. They also put Mortgage Bankers Association and Freddie Mac's trend in there. However, I find that the Mortgage News Daily tends to be the most accurate as to what we are seeing here in the Twin Cities market for rates. So we can see here after that announcement, not a big drop off, 6.98, but now going down to 6.94, and I would expect that to continue to drop as we see where rates go tomorrow. Now, the forecast is that, and this again is looking at Mortgage Bankers Association forecast, looking Q1 6.4, fixed rate, Q2 6.4, average. And this is actually pretty close. When I look at the averages that I've been running, I know we're sitting a little bit higher right now, but when we look at the average, that's pretty darn close. But for quarter three, they're saying down to 6. So that's going to take some pretty good movement, but I think that's going to be really positive for the market and possibly get down by quarter four as low as 5.6. So going back here, we may have seen the peak. I mean, just going back to last month, we got up to 7.14. So the highest rates are probably behind us if these forecasts hold true. So, with inventory on the rise out there, this could be really positive for home buyers out there with rates starting to go down. So definitely something to keep an eye on. All right, let's take a look at some of the other trends we have going on out there in the marketplace. New listings into the market. This is for the week ending on the 3rd. Goes up a little bit, 1,464, and that 1,400 number holds relatively true when I was looking at the most recent data that's going to be coming out when the next report is released here next week. So I expect that 1,400 number, high 13s, to stay true over the next few weeks. Pending sales did drop off. Again, this is kind of going into that Memorial weekend, beginning of summer timeline, so not a giant surprise there. That gap on inventory, though, in comparison to last year. So yes, inventory is getting higher than where we were earlier this year, but in comparison to last year, that spread is getting bigger, 6.7, which is a little bit of a surprise. I thought we'd be in a more positive inventory range over last year by this point. So those higher interest rates still playing into those second-time sellers holding their homes back for the market. But again, if we see interest rate drop, that could be an opportunity that opens up. Inventory of homes, month supply-wise, we are at 1.8 months. All right, taking a look at some other data points here. Showings per week per listing, median sale price range. Continues to fall. We had that little boost the weekend after Memorial Weekend, going up to 5.78 average number of showings, but then drops back to a 5.43. And then in comparison to last year, it was a 4.58. So we are tracking in a better position than last year. And a lot of that is, well, lower amount of homes for sale in comparison to last year. That's going to equal more showings per listing out there. So up by 15%. Okay, taking a look at where our market meter sits, I'm going to show something I don't show every week, which is the weekly changes in the market meter. And we can see we drop off on the market meter from a 7.92 down to a 7.39. So on our market meter scale, that is going to put us here right in that. Oops, let's change that back up here. Put us right in on the 7.92 would be right about there, and 7.39 we're going to be sitting right about here on that market meter. So we are getting close to that stable market range. I know that I said, and I'm going to stay true to this, that we'll probably hit that stable market. So 7.39 still in the seller's market range, but getting closer. There's our stable market at a 6 or lower, all the way down to a 4. Probably going to hit that stable market by 4th of July. So again, my predictions, stable market 4th of July, and could have a late summer boom though if we see those interest rates drop off as predicted. Something to keep an eye out there. Again, keep an eye on that Mortgage News Daily site, a good site to keep track of where rates are kind of moving across the board to get a good idea what is a kind of average rate out there. As always, make sure, again, if you like these videos, you click on that like and subscribe button, share them out, and you can always reach out with any questions. Take care. Have a great week.